Morning, Steve Freed in Chicago with the morning grain comments. Well, we had soybeans a little bit higher, corn and wheat unchanged overnight, and very low volume. Seems like the market's kind of searching for a bottom given the recent USDA higher supply numbers, especially for corn and beans. It is interesting that this week the barge basis for beans got as high as 145 over the September. September is 30 cents over the November. So also Central Illinois paid as much as 75 over the November versus a quoted bid of about 40 over. So you can kind of tell that the old crop soybean supply is getting tight. One of the new news overnight is that yesterday the 1 week forecast for the Midwest was drier. Today they went wet. We have a tropical depression off of Georgia and South Carolina that might spin some moisture up into the Midwest that could cause more delays in the harvest. So we'll have to kind of watch that impact. We're also noting that as farmers get into the cornfield, they're finding lower yields than what they were hoping for. Now, one group says that if the entire Midwest has 180 bushel corn, we're still going to have a record yield, even though it's down from records. Other people think that some of the quality damages could bring the final yield down from the USDA's numbers. So we'll see what impact that has on the October crop report. I guess the big news overnight is the Bayer and Monsanto merger. It's worth $66 billion. The Ag Seed and Chemical Company, once it's all together, will have a little over 25% of the market share. And that'll be interesting to see. There is reports on Monday that the Farmers Union will go to Washington to try to convince Washington that these mergers might reduce the competition in the market and raise prices. We also noted that it looks like Argentina, because they're still in a recession, may not drop their soybean export tax. We'll see if that shifts more bean acres in Argentina to corn and puts more emphasis on Brazil's crop next year to satisfy the demand. We are hearing that China's patient in buying nearby beans from the United States. They're aggressive in buying July and August from Brazil. They have positive crush margins, and their coverage for October is maybe 80%, while it's 30% for November. It is interesting if we go back and look at the previous record yield year in 2014. Both Dees corn and November beans made their lows on October 1st. We actually had about a $1.40 rally in beans and a 70-cent rally in corn from October 1st to contract expiration. So if we see if we can follow that blueprint this year. Other than that, funds yesterday, sellers of beans, meal, oil, corn, and wheat, whittling down their long positions in beans, meal, and oil, adding to their short positions in corn and wheat. So low volume trade, prices unchanged, outside markets. We've got the dollar a little bit lower, and we've got crude a little bit higher, and our stock market should open up a little bit higher after yesterday's losses. As always, these are my thoughts, not those of ADM or ADM Investor Services. Have a safe and profitable trading day.